Good morning, everybody. Today I decided to do a recording because my aunt and uncle are learning to trade, and I wanted to just give them a little bit of a first-hand experience of how I trade, and a full breakdown and recording of it, and a walkthrough while we watch the markets here this morning. Before we start, though, I do want to pray. Thank you, Jesus, for this day. Our Father in heaven, hallowed be your name. Your kingdom come and your will be done, on earth as it is in heaven. Give us this day our daily bread, and forgive us of our debts, as we forgive our debtors. Do not lead us into temptation, but deliver us from the evil one. For yours is the kingdom of heaven, and power and glory forever. You are the Alpha and the Omega. If it wasn't for you, I would be nothing, and without you, I am nothing. I ask that you bless this day and bless this holiday for everyone in this world and their families and their loved ones. And I ask that you bless my mind to be sound and comforted and peaceful during this morning's trading so I can control my emotions to be able to do exactly what you have asked me to do in this life for your kingdom and for your glory. I thank you for your love and your grace, as I do not deserve it in any way. And I thank you for opening my eyes to my true purpose in this life, which is to follow you, no matter what that outcome looks like. In the name of the Father, and the Son, and the Holy Spirit, amen. Amen. And amen. Okay, so let's take a look at the charts here. This is a little bit early. I'm going to take a trade. I'm actually in a trade right now. And because let me just go back a little bit. You can see that we took out previous daily low, and then you can see this volume profile here on the left. This is the value area low of this volume profile. And so you can see that when we look at these candles, you see this big area right here. This is what I would call, um, a fair value area. If you're an ICT trader, you'll know what that is. Essentially, right, there are orders in there, and the markets came down. It came down into this value area low. We'll change the shaded of this color just so it's a little bit easier to see. Okay, so it came down to the value area low, and then it had a huge drop, took out the previous day's low, and then completely just responded and bounced back up. And then it inversed this fair value gap here, which I will change this into red color just to make it easier for you to see the differences. And then it actually, you can see here, it created another one in the opposing direction. So what I would like to see, I'm already in this trade on my Top Step account. I'm not trading my personal account for the rest of the year because it is holiday season. So my personal account, I am up on the year. It has been a pretty tough year, truthfully, with the war going on and politics and everything. It has been really, really hard trading. So if you are trading out there and you're struggling, everybody is. Don't think that you're a bad trader or you don't know what you're doing. It is very difficult in these markets right now. Probably the hardest I think I've ever noticed it. But I'm in this trade. My position is, let me see if I can drag this over. I don't even know if it's going to show up or not. Probably not. Well, my position is right here. Let's do this. I'll just show you on a paper trade account. So you'd be entering in the position here. Your stop loss is going to be going down below this low here. And then you're looking for a 2R trade. So if you were to take your long position tool, by the way, I'm looking to the left because that's where I have my second monitor. You put your position here. Your stop loss is going to be below the low. That should be a protected low. And then you're looking for 2R. So 2R actually is going to be pretty much right at these highs right here. So we can go ahead and we can mark just below those highs is what I like to do. And that's typically the trade I'm going to look for. as far as what I'm aiming for in the day. So if you were risking 3 micro contracts, this would be, as you can see, $154 risk to make $322. So now what we're going to do is we're just going to watch the markets. We'd like to see a nice push up. If we can break this high here, we would consider adding one more contract to this position. That way we can capitalize on a little bit more gains for the day. Now, since it is a holiday week, I am trading pre-market and my Top Step account, which is a trading combine account. If you don't know what that is, Google Top Step futures contracts. It'll explain it all. I'm not going to dig into that for you. But on the week, I'm already up over $800 in that account. And so I'm just going to take this trade. Currently, my entry was a little bit worse than the one that I showed you here. So I'm risking 185 to make 293. If the market does go there, then I'll just close that account. I'll lock the account for the day. That way I can't trade it and give any money back. And then I will just watch the markets with you guys in the morning to see what happens there. If I'm wrong on this trade, which is very possible that I am wrong, we could come down and take out that low, because if we were to scroll over here, remember this is the value area low, but we do have a large gap all the way over here, as you can see. And a lot of times what they like to do is fill in this gap here, and you can see that my stop loss is just above that. So they may come down and want to fill in that gap. Or they may leave a little bit of it open. So we will see. But that is a reason why it could drop lower, and I am open to that being a possibility, and I'm comfortable with the risk that I'm taking on this trade. With 3 micro contracts, risking for me on the account 185 on this paper trade that you can see right here in TradingView 154. If you are trading and this is your first time getting into trading, I would recommend that you just open up a TradingView account, pay the monthly fee. I want to say it's like $30 for the pro version of TradingView. That way you get the candlesticks that move with the current market second by second. You're not getting delayed information. And then I would just trade a paper account. You just go ahead and click on paper trading, put in there like 10,000 or whatever you would put as your starting capital if you were to do this on your own, and trade for an entire year. I know it's going to be really hard to discipline yourself to do that, but I promise you, if you trade in a paper account for one entire year, you will figure out what your model is, and you will understand how the markets move. It'll make it a lot more comfortable and less stressful when you are in trades with real capital, with real money. Because when you take a trade and you lose, that money is gone. You cannot get it back. You should never think about getting it back. That trade idea was incorrect, and you move on. Just so you guys understand, probably 95 to 98% of traders are not successful, and most traders have an average win ratio of about like 30 or 40%. So you don't need a high win ratio to be a profitable trader. You just need to be able to handle and properly manage your risk, which is what you're putting on per trade and how many trades that you're taking per day. Okay, so we're going to go ahead and watch this here. I'm going to be looking to the left and center, just because, again, I have my second monitor over here, which is the screen that you're seeing, and the screen in front is my other monitor with the camera, as well as my combine trading account trade that is currently open. So these are 1 minute. This is a 1 minute chart. So each candlestick is worth 1 minute at a time. You can see in this right hand corner over here, it shows you the ticking. So it's telling you how much time is left of this candle. So there's 21 seconds left. What I would like to see is I would like to see price continue to stay within this yellow box. Okay. If we drop down below that, that is also possible. You can see if I was to extend this box down just slightly, there's a little bit of a gap right here. I'll zoom in just a tad bit for you. You can see that gap right here. Let me find a tool to use. Quite a large arrow, but you see that gap right there where it's pointing to, right? So sometimes I include that, but I'm just going to include this one here because we really shouldn't come back down into this area at all since we inversed this fair value gap. So what's really nice is you see how these candles, there's wicks that are dropping down, but these bodies of the candles are staying within this yellow box. That is a good sign. I want to continue to see that. If we continue to see that, and then the market continue to push up here, we get a good heavy push movement. That's telling me that buyers are in control right now. And then, like I said, if we see it break this high, we could consider adding to this position. A couple other things I have on the chart here. You can see these candles here. So this is actually 4 hours. So each one of these candles represents 4 hours of time. I like to be able to see a higher time frame candlestick without having to swap to a different chart. And then this single one by itself right here, this is the daily candle. So this is today's candle. I also like to see the daily candle because typically the way that the markets will function and move is the daily candle will open. It will have a low, then a high, then a close if we are expecting price to move higher in the market. So it will open like this. I will show you. So normally it will open here, and then it will go open, low, and then high, and then come down and close somewhere in this area here. That is typically what you would see. Let's move this over just to give you a little bit clearer. A daily candle if we're expecting price to be moving higher. If we were expecting price to be moving lower, it would just be the inverse of that. Okay, so again, just gonna, it would be open, high, low, retrace slightly, close. Okay, so you see how they just dumped it right there pretty heavily? But remember, my stop is at the low. Okay, so we're still in this trade, but we're probably going to be taken out right here because, like I said, they could want to fill in that gap that was to the left. And that is totally reasonable for them to do that. But we're going to go ahead and stay in this trade to see what happens. If you take a look at this right side, this is the S&P 500. I watch the NASDAQ and the S&P 500, but I trade on the NASDAQ. The pairs typically correlate, okay? So you can see here that the S&P 500 actually took out this low. So when I say take out, I just mean that it grabbed the liquidity below that. And it did not do that on the NASDAQ yet. So it is entirely possible for it to drop down and take out that low. And if it does, that's just the name of the game. And that's how the trade is going to play out. So we broke down through this. So that doesn't mean that this zone is invalid. It just means that, they, like I said, they wanted to come down. They grabbed the liquidity here on the S&P, but they did not grab it on the NASDAQ. So what I would call that is an SMT divergence. So that just means that typically smart money is forming into the markets. They're building a position right now. If we wanted to play even safer, as far as giving like a really good stop loss, below that low is good. Again, if they were to close the gap down here, they may go even lower. And if they're going to go lower, they could go all the way down and grab this low, potentially these lows down here. We don't want to be risking that much. I mean, that would be a ridiculous loss. I mean, just to give you an idea, $500. We're not taking that type of a loss. If they come down to take out this low, they're probably just going to push it lower. We will look to re-enter a trade on a different setup. But currently, right now, this trade is still in play. And we are probably going to get swept out right here. We're just going to go ahead and see.
Order filled.
Now again, keep in mind this is pre-market session, so the markets have not opened up technically. The markets open up at 9:30. Okay, so if we were to break above where the current entry is right now at 25,633, we would actually look to add to this position here. As again, we are at that value area low, that blue shaded area. That would give us a good indication that the buyers are still pretty strong. They are liquidating the sellers and scooping up those orders and pushing price higher. So that would look something like this, where we would put a buy stop here, which means if it passes that line, it is going to enter us a position, a buy position. Right at our current entry. But it looks like that they want to take this lower. I'm going to clean this up a bit because I don't need to see these things on the chart. I can see them already. We'll keep this value area low because it is nice to kind of understand where that area is at right now. You can see the point of control is this white line right there. Let me see if I can change that to a black line potentially. Be a lot easier to see. So that point of control is up there. That is a high area of liquidity. Okay, so see how we pushed up through that. So we had that buy limit order in, so that buy stop in, which means it entered us another position. So we're 4 contracts in on this, risking $200 to make $429 on this current trade right now. Again, if it breaks this high right here, we could look to add another position to it, which would put us at 5 contracts. Now we can lower our risk a little bit to this low here, as if the market's going to be going higher, it's not going to come down and take out that low. Because if it takes out that low, it's going to take out this one. So we could lower our risk a little bit, which is nice. Do that on both accounts. We are hovering around the weekly open on the NASDAQ, and we are pretty far above it on the S&P 500, as you can see. Weekly open is all the way down here on the S&P. So what you could do also is, you can see all this liquidity up here. You can see these highs right here in this area at the point of control. That's a great area for take profit. So you could set your take profit all the way up at those highs. And then you can go ahead and what I normally do is just take some position off. So you could do a sell limit order here. You could take a sell limit order right here. So what that means is you're just taking profits off the table as it's going up higher. I can do a sell limit order here. So then we would have order would be taken off here, would be taken off here, taken off at these highs here, and then our final position would be closed at the point of control. So you can see the sellers are really trying to push this down pretty heavily here.
Order filled.
So they are probably going to push it down to take out these lows since the S&P 500 took out those lows and the Nasdaq did not. So we most likely will get taken out of this position, and then they are going to close that gap, which is at this previous daily high down here, which is okay, right? That happens. We will close out of these limit orders that are up here, and then we will wait and just watch markets, see if there is another opportunity for entry to go long, as I do think that the overall trajectory of today is going to be higher, as in we are in a pretty deep discount since the overnight session. This is Asia session in green, London session in purple, and we've been selling off. So we are in a deep discount right now. This is when you're in a discount, it's typically a time that you would want to be buying the market. And so we're just going to leave this trade on the table. It is still a valid trade right now. No reason to take anything off the table quite yet. Now at 9:30, there's typically a lot of volatility. So if we don't come down here and take out these lows, and we push up past these highs right here, we have a whole bunch of highs all through this. Then we could probably anticipate the 9:30 opening candle to push very heavily to the upside with a lot of volatility, a lot of volume. But again, remember, like I said, we have all the way over here. We're going to mark out that there, drag this over. This is the remaining part of the gap that is open that they very well could come down and fill this area. Okay, so we could expect them to come down and fill that shaded area up. It just means putting a body candle closure through that area, and or a body that comes down and a wick that leaves it. That is also a possibility. So like I said, we have to stop at that low, because if it takes out that low, which it does right now, we could anticipate it to take out the other low and then continue to move lower, which it's probably going to do right now. Okay. Again, let's take a look. We're still at the value area low, so we are out of the position here. Okay, so we have that $200 loss pre-market session. So now we're just going to wait We're going to wait for, the markets to probably continue to move lower. We bump up to a 15-minute chart, so each candlestick is worth 15 minutes. You can take a look here. Look at how far down into a discount that we are. Go ahead and do a dotted line here that just lets me know that the previous daily low has liquidity has been taken. So it just gives me a good understanding of what's going on in the markets here. Same thing. A lot of times, what I like to do is, since we're just going to be watching, I'm going to show you guys. This is a daily, so each candlestick here is going to be a daily candlestick. So we have a daily fair value area that it's in. We have this opening gap right here that we are expecting to be potentially filled. We can go ahead and mark out the daily highs and lows on the S&P 500. That is typically what I like to do. It's just a good habit to get into, of marking out both of them. Okay, and then up here is going to be our previous weekly high, and down here would be our weekly low. Okay, so let's go ahead, get a better look. Okay, so a lot of times what I like to do is zoom out of the markets to see what's going on. Okay, so this is, again, these are each candlestick worth 15 minutes of time. You can see there's 2 minutes left of this 15-minute candle. Like I said, we could expect price to drop lower and fill in this gap here. There's still a little bit of a range. It's like about 15 handles, so not 15 points, not very many, but they very well could do that. If we go back to that 1 minute chart here, you can still see that we didn't take out that low quite yet, which is, again, if we would have left our stop there, we would still be in this position. But we wanted to manage our risk properly. Typically, when the market takes out one low and it's this close to it, it's normally going to take out the additional one, but it did not. So we're just going to go ahead and watch the market. That doesn't mean that it's not going to go down there shortly here before market open. We have 20 minutes or so before that happens. Again here, if we were to break this, we could go ahead and put a buy stop order there. As if the market pushes up fast through that, it is likely that it is now going to move into higher ranges, and that would be a good position to take. We are at the value area low, and we are showing strength of buyers. They're trying to liquidate and soak up the sellers, but the sellers are holding pretty strong here at the previous daily low. As you can see, is pushing it down. They're holding it down. So I would not be shocked or surprised if they use this area here to push it lower, and or this area right here, which they kind of already did, as you can see. The body candle closures are staying within this other box just below it. We did quite a pretty deep move down, so we are in a pretty deep discount. So it is not uncommon for the markets to now continue to push higher. Um, we are in a deep discount, like I said. That's when institutions are buying the markets in a discount and they are selling at a premium, and vice versa. They are selling at a premium and um, buying at the discounts. So if they're shorting the market, they are shorting it when it's high and buying back into the market to cover those shorts when it's low, and then they are buying the market when it's low and selling at a high point. This orange line right here is the weekly open. So we broke below the weekly open with some pretty decent displacement, some good movement. So like I said, we are probably going to drop down and fill in that gap that is lower. But I trade price action, so I just trade based on what the markets are showing me in the moment. I don't care about what's happened previously too much, other than major liquidity points. Major liquidity points are previous daily highs and lows, previously weekly highs and lows, and then certain times of the day. You can see I have 8:30 marked out right here, midnight marked out. If I was to go back a little bit further, let me jump to a 15 minutes just so it's faster. I've got 10 a.m. marked out and 9:30. So midnight, 8:30 in the morning, 9:30 in the morning, and 10 a.m. in the morning are key times of the day where you see liquidity injection. 8:30 is typically news during 8:30. Midnight is a very, very important time of the day. That's when the markets open up, overnight session. And then 9:30 in the morning is the market open, New York Exchange open, and then 10 a.m. is also typically when you will see news. So on that, the Top Step trading account that I was in, um, as we were dropping lower into this area over here, I was taking some position off for a loss. So, and I left my stop there. So my total loss on that account currently right now is $119. So we're starting the day at $119 loss, which is never fun. But the thing with trading is that, like I said, that's the name of the game. That's just how it goes. You want to control your emotions, control your risk. That's why I pray every day to ask the Lord to help me with that because it does get stressful when you trade. It's probably the most stressful job I've ever done in my entire life, and the most difficult. So you see how these bodies are staying within the 50% range of this shaded box here in yellow. That is telling me that the markets are pretty weak. Sellers are in control. They are pushing it lower. The point of control is still down here, as you can see, or sorry, the area low, value area low is down here. Point of control is all the way up here in the black line. Value area high is all the way up here. Now we'll use this as a purple box. Oh, so I kind of like the blue. And we are going to use I'm going to save a template for this. That way we can just keep those areas on the chart We know where they're at now. Getting into a buy position at the value area low and targeting the value area high is a great trade opportunity. Clean this up a bit. And let's see what happens. Switch this to a 15-minute just so I'm marking all this out on the other chart as well, just so I can kind of keep tabs slightly of just the value area high and low. I do like to be able to see that on both charts. It just makes things a little bit easier. Okay, so like I said, right, value area low, we want to see a heavy push up past here. If it continues to push, we will go ahead and do a buy stop here as well. Buy stop here. So it would enter position there, position there, position there. We have 3 in, which is exactly what we just did. So the low should be a protected low again. Actually was a protected low, as you could see. This actually never came down to take that. So if we would have left the stop loss there in the initial trade, we actually still would have been in the trade. We would never even have taken that $200 loss. But you know, like I said, you want to manage risk properly. I'm comfortable with what I did. That was proper risk management. Nothing wrong with that. Point of control is all up here at 25,711. Keep in mind, market could still fail, could still drop down and fill that gap, right? That is still a possibility here. Currently with this trade, we were only risking $59, as you can see. So that's not a bad risk. To make potential, I mean, as we could just put it right at just below this 146. And then as we continue to enter this position, as it pushes up, we will move our stop loss higher to lower our risk. Okay, so if it pushes way up past here, we will look to move our stop loss probably in this area. In here. $26. So we got 3 minutes, less than 3 minutes before market open. Remember, high volatility, high injection, right at 9:30. We could see them drop it viciously to fill that gap, or they could pump it very fast also, which we are ready for both scenarios. That's why we have our stop loss down there. They drop it viciously, we will be exited from the position for that $59 loss. Or if they pump it viciously, we're going to get filled on these orders relatively quickly here. And it's probably going to run up to the point of control, and we'll make back our losses and be ahead on the day. The fact that we did not take out this low here, that we did right here on the S&P 500, gives me a lot more confidence that we potentially may be moving higher with some speed here.
Order filled.
So just like that, these orders are getting filled. $200 risk, which is still not bad, right? We want to see some volatility put in. Like I said, if those orders get filled, if we move up, we are going to take off some risk in case they just drop it real fast. And if we break that high, we have another position, so we have 4 in. So right now we're risking 136 to make 411, which if we jump up there, we're going to get another order in. This will probably bump this to 550-ish, minus the $200 loss that we took already. So we would still be up 300 on the day. About 58 seconds before market open at 9:30. We are at that value area low, remember, so that's a great area to buy, great area to sell. We've got liquidity up here. We've got London highs, that purple line. Asia highs is that green line, and the value area highs up there. So again, that is, those are great liquidity points. You could push this here. And again, remember, we could be looking to take some profits off the table. So we could do a sell limit order there, sell limit order there, and then the rest of the London high. As the profits are taken, we would be moving our stop in profit. So there's the 9:30 open. Remember, could see a lot of volatility up. So this order didn't get filled there for whatever reason. So we're going to go ahead and just buy it in anyway. I mean, as you can see, we are moving fast. We are moving really fast. So we are moving our stop and profit break even right now. We do not want to be in a position like this and then just give it all back to the markets like this. You see how quickly we are moving up here? We're going to be trailing our stop pretty aggressively to lock in those profits. Boom, there we go. So our other position got taken out. There we go. So we are moving up here pretty drastically. About to take out London. I'm going to get rid of these orders here. I mean, it's moving so fast that it can't even exit our position in time, right? So there we go. Just like that, all the way up, just like I said. So on the day there, it's closing the positions out. It's taking some time. Paper trade. It's not always, it doesn't always. We're just going to close the position if we can't. It can't even. It's moving so fast that it can't even close the position. That's how fast it's moving. You see, boom, there we go. So there you go. On the combine account, we made $400, even though we took that $119 loss. On this paper trading account, as you can see, let's go ahead and pull it up here really quick. Let's go to balance order history. Let's see orders. Should show it here somewhere. Balance history. Okay, so $182 loss and then 135 gain with one of those positions being taken out as we were placing them as it was moving up. 153 and 335. So you go ahead and add that up. 3, 4, 5, 600 minus the 182, so up 400 and something bucks in the day, just like that. I mean, that was in a matter of how many minutes? 2 minutes into the market open. So hopefully that was insightful for you guys. Hopefully that helped you out, and you get an idea of what I look for and how I trade. I'm a day trader, so I don't hold my trades much longer than a couple hours. Typically, within the first 5 minutes is usually what happens with my trades. So as you can see here, I mean, we shot up there. So again, remember, let's go ahead and recap this. I mean, we could still go the previous daily highs all the way up here. So we could still push even higher. That is a possibility. Again, like I said, I am the type to once I hit my daily goal of the day, which is typically $300 to $500 a day, I will lock myself out of my accounts. That way, I do not give back any money. I don't want to be giving back any money to the markets when we have an aggressive move like that. That is, just great to see. We're at the point of control right now. We could drop down a little bit lower to fill in some of this. And then we would like to see buyers, heavy movement, push up right here. And then that you could potentially enter a position again and look for a previous daily high as your next target. Because if we go up to the 15-minute, it has taken the London highs, but we have not got the Asia highs quite yet. There's liquidity there. There's liquidity here at the 8:30 a.m. price from yesterday and 10 a.m. price from yesterday, as well as the 9:30 a.m. price and then the high of day. So there is all this liquidity up here still and orders that need to be filled. So it is very possible that they may continue to push it up there. We'll go ahead and watch on the markets just to see what happens here. But again, just to recap, remember the S&P 500 had taken out these lows over here, right? The NASDAQ did not. We are at the value area low of the day, and we entered our position because we broke the high here for our second entry. Remember, if we left our stop here, we still would have been in this position. We would have never even taken a loss in the day. We would have been up over $700 in the day in a matter of minutes. But we re-entered the position. We were still looking for a long. We were still expecting the market to go high. Look at the daily candle. Remember what I said? When the daily candle, if we expect the daily candle to be a green bullish candle, what do we expect? We expect market open, drop down lower, higher, retrace slightly, close. That's the expectation of the daily candle. what does this candle look like to you? We opened at this price here. We dropped down lower. Now we're going to retrace. We're going to go all the way up and retrace slightly and close. Okay. So here we are, remember, we are at that point of control. Okay. And they are holding it pretty heavily right now. And we're at that value area high. So if we can get, we see this candle here, this movement, this is, potentially this is a good buying order. Stop loss below the low, take profit, previous daily high. We could do a buy stop right here. If we break that high, we could add a position and then start to lower our risk. Remember, keep in mind, I'm not trading on the other account. I have locked that account. I'm just trading in a paper now, just to show you guys. I would also, if you are trading with real capital, if you have a winning day, like right now on my other account, I'm up $400. Lock the account, close the account, get rid of it, open up your trading view, open up your paper trading account, and just paper trade. If you want to be in the markets pressing a button to test some theories out, use paper money, use fake money to test those theories. Don't use your real money. And it is very important to test theories. It's very important to back test to make sure that your trading strategy is consistent. Okay, so like I said, I always lock my account. So what I'm going to be doing right here is, here's the account. So as you can see, I don't know if it's going to let you see it, but we're up 400 on the day. I'm going to go ahead and hit lockout. Confirm trading lockout. We're going to do all day. And so you can see, boom, locked out. So I cannot trade on that account. Even if I hit the button, it's not going to enter anything. So here we go. And then we're going to go ahead and watch the markets here. Let's see what happens. It's failing at this value area high. So they could very well push this market down, take me out here, $88 loss. Again, up 600 and something. So we're at that point of control area. I would say that this is pretty good. Let's get rid of that. Move this to a 5-minute chart just so we can, each candlestick's worth 5 minutes. So you can see quite a heavy movement up right there, right? So they're at that point of control. I would like to see them push really, really heavy through here. We got a buy stop order at those highs. That would get us into another position. We look to the left here. We could put another buy stop order here at the 10 a.m. and 8:30 a.m. price from yesterday. And then again, we would be lowering our risk as we go up. So let's go ahead and see what the markets want to do for us. See what happens. You can see how this candle right here has a nice big wick. That tells me that the buyers are really strong. They're liquidating those sellers as they try to get down in here. And so I would really like to, that's why I have the stop loss at that low right there, because I don't anticipate the sellers to get strong enough to push it down in there. But it could happen, it's not to say that it won't happen, but that's not my expectation. I expect us to continue to hold right here. The buyers are liquidating those sellers, pushing the price higher. Would like to see a lot of movement push up here. The 50% of that range is this dotted line, so we could see that, but and push up, but they could come down and take that out and come into the area that's next to it, which again, remember, I called that a fair value gap right in here. Chart's giving me a little bit of wonkiness because my position, my stop loss is there. So would really like to see a nice big green candle over the next 2 minutes. So this next candle, we want to see a heavy movement up, putting us in profit now, and then tagging in this buy stop order, tagging in this buy stop order. If we hit up here, we're likely to see a lot of volatility, another big candle like this up to previous daily high. That is typically what we would want to see, what the expectation would be. If you look over here on the S&P 500, we can see that it already took out the previous daily high, so we want to keep that in mind. A lot of times it can reverse there, or what it will do is it will continue higher. If we shorten this chart and kind of look back a little bit here, we still have some areas where the S&P can move higher. $10 a.m. price, 9:30 a.m. price, all the way up here. So it's the S&P definitely has room to go higher, which gives us the indication that the Nasdaq potentially could push for that previous daily high. So again, remember, look at the daily candle, open, low, push up higher, and then flows. So that's what we are expecting. Remember, the 4-hour candle, we took out this low right here in the 4 hours. So if I was to go to a 4-hour chart, we took out these lows, filled in some of that gap, and now we're pushing higher. The expectation would be is to take out the previous daily high. So we're just going to go ahead and watch this. That is still my expectation. I'm still comfortable with the second trade here at an $89 risk to make 134. And as we continue to push, it's going to enter us into these positions because we have our buy stop orders that are set. And it is going to allow us to capitalize on higher profits. As we move up, we will trail our stop loss, putting us in an area of a lower risk, and potentially as we get up there, we will be putting us at break even. That way, if it did return, we're not giving any money to the markets. We are just happy with the $600 that we took away in the beginning of the first 2 minutes of the day. So we're going to go ahead and sit here and watch. I think we're about to push up through here right now, which is really nice. We want to see a lot of movement right here. Like I said, if we break these levels that I have, we're going to see some volatility injection. We're going to see some pretty quick movement. So right there, it should have entered us into that position, and it's kind of struggling. Like I said, it's a paper trade account, so it doesn't. It's not always quick to, like, even if I close, there it goes finally. Okay, we're going to move our stop loss to this low here, taking off a little bit of risk. Okay, it took out the Asia high, so that was that green line that you can see just briefly right here. That's the Asia market session high. And we're starting to fail. So I'm going to take off even more risk. Put it at that low. We really should not return anywhere in this area. If we do, we are probably going to be going lower to take out this low and this low. I do not want to be in the trade for that. This box, this area right here should hold price higher. Really no reason why it should go anything lower than that. And we should see some volatility, some injection, some heavy movement up. We are 16 minutes into market open. And I'm not sure why, but my value area is just not popping up on the 1 minute, which it should be. There we go. Just have to look back further enough. Okay, so look at that point of control, that black line. You see how it's just prices going sideways there? That is large institutions accumulating positions at that point of control. That is why I do not expect price to be returning back into that area after we pushed away like this. Now, I would really like to see it push up even higher. If you wanted to manage your risk not quite as tight as this here, you could put it at this low right here. It is a possibility. But again, I don't want to get back that much, so I'm only willing to get back the 117 of the 600 that we are in profit on this. Again, remember, I have closed the other account. I cannot trade that account. I'm up over 400 on the day for that one. That is my daily goal, between 3 to 500. I'm happy with that. I got that in the first 2 minutes of the day. This is Christmas week. I'm going to be very satisfied with that. You know, that's a $1,200 week right there. So I was already up, 800 on the week, close to 800. So, we're looking at $1,200 in the week, and it is Tuesday. So we're pretty satisfied with that for a holiday week. So we want to see some heavy movement here. So just like that, we're going to move our stop here. We should not go below that area. Remember, I said that this area should hold price higher. We should see some pretty good movement up here. They've accumulated their positions here, and they're pushing price higher to the previous daily high. That is where I think the target's going to be. They push all the way up there. That's going to be another $338 in the day. That would put us on this paper trading account over $1,000 just in one day. So truly, truly amazing. Trading can definitely change your life, but it can definitely really be a negative thing if you don't know how to control your emotions and control your proper risk management here. So again, like I said, I am not going to be, if it comes down, takes me out, it takes me out. It's probably safer to put the risk right here at the bottom of this, just in case it wants to come down, tap into the 50% level of this range here. We'll put it at the point of control. I don't think that they're going to want to come all the way back down to the point of control. They've already accumulated all these positions right here, you can see. These positions are already accumulated. Really unnecessary for them to bring price back down to that area right there. We are failing at the value area high. We would like to see this hold. So boom, there you go, taken out. Well, that doesn't mean we can't look to re-enter a position here. See how they kind of came down? That wick is forming. So it's a heavy wick. That's telling me that there are buyers here that are holding that price up. We're going to go ahead and re-enter that position. Stop loss at the low. Buy stop order here. Buy stop order here. We only gave back $156 of the 600 that we were up, so it's totally fine. This huge wick right here on this green candle is telling me that buyers are really stepping in. They're holding this area, this point of control. And it's right at that value area high, so they're trying to hold the value area high, pushing price higher. I still think previous daily high is going to be the target. There's nothing telling me that that is not the case quite yet. If we dump down and take out this low, that would be the end of your day. That you at that point you'd given back 200 of the 600, so you're still up 400 on the day, but you don't want to give back all your profits. Again, like I said in the other account, as soon as I hit the 400, I'm done. I'm not going to give back those profits. If it's your personal account, I would not give back the profits. I would just close out for the day at the 400, the first 2 minutes of the day. So they're pushing it down to that point of control. So they've accumulated all these positions here. They pushed it up, and then now they're still accumulating positions. We have not taken a higher time frame liquidity. So on the 15-minute, we have taken the London highs and the Asia session highs, but we grabbed all this liquidity down here, the London lows. So this high over here, the previous daily high, is the previous day's high or the 4-hour high. So that's what we would, kind of anticipate the market to be going for long term on the day. If you look at the S&P 500, they are way above the point of control. So they accumulated positions and then pushed it way above. So it's likely that, again, they're going to continue to push higher. On the NASDAQ can sometimes lag, sometimes it's faster. It does have a little bit more volatility than the S&P 500. As you can see, there's definitely a lot more manipulation within that. But we're going to see what happens. They could just dump it all the way back down to this midnight price or this 8:30 price. That again would be kind of an area that you could potentially look. You can see over here there's a lot of volume. So they are really dumping it down there right now. So we failed at the value area high. And they are continuing to push lower. So the sellers are really trying to stay in control of the battle currently right now. And the buyers are trying to step in. Institutions are accumulating positions. They are buying. The daily candle of the day is definitely going to be, at least in my opinion, a green candle. I don't expect the candle to be lower. Or a black candle or a red candle if you're using a traditional chart. I don't anticipate that being the case. So again, if we move this up, $165 loss, boom, there we go. So we're going to be taken out here for a second for a $72 loss. Right at that midnight price. Okay, so we've given back some of the profits, but not a ton. And we continue to watch price here. We could take out this low and potentially get an opportunity for another, buy position. Looking long, looking for markets to go higher. But currently, right now, those sellers really held strong at the value area high. Like I mentioned, right earlier, one of the best trades you could do is enter down at the value area low and then take your profits at the value area high. That's what I did with that other account. That's why I closed the account. This is why I closed the main account and then practice on a paper trading account during the markets as well to test theories, test ideas without giving back real money. So I'm not even concerned about any of this. This is not any money that I have to worry about. It's all paper money. My account that had real money in it, I showed you. I closed the account. I locked the account so I cannot trade on it. I took my 400 profits and walked away for the day. And so we're just going to test theories on the paper trade. So midnight price, we came down, we took out this low right here, but the S&P did not. Look at that, right? So what do we call that again? That is that S&P divergent, smart money, accumulating positions. So what I could look to do is if I see some form of volatility, some indication that buyers are stepping in, then I could look to continue. I could look to take another position long. What I would be looking for is this gap right here. I would like to see that covered up by a green body candle, and a closure above that before looking for a position. Or if we hold here at this midnight price, we potentially could see another opportunity for a buy depending on what the markets show us. So we are below midnight price now. S&P is at that point of control. That's that thick black line right there. Tapped in. Look at how the wick of this candle tapped that 8:30 a.m. price all the way over here perfectly, and then responded. Right, it's bouncing up. That is a pretty good indication that we potentially may want to move higher here. So if we were to take a buy position, here. Our stop loss would be below the low. Our take profit's going to be this daily high. If we break up here, this is where we could have a buy stop order placed. We also have a buy stop order place here. And one at the point of control. It's a little slow today. It's a paper account. Sometimes it's just super slow. Doesn't want to get the orders in all the time. So look at how much the S&P is ahead of the Nasdaq. The Nasdaq is dropping lower, and the S&P is holding that point of control. It's still dropping lower, but it's a little bit behind. It's lagging. And again, they very like I said, you could have taken a short here too because we got to the value area high and we failed. Very well could have been a pretty good opportunity to go short on the market down to the value area low again. Today it looks like they're going to chop up people quite a bit. This is also why I use the paper account after I make the profit. The first 2 minutes, maybe all those profits were good. Walk away with that. Paper account, I don't care. This isn't real money. I'm not even concerned. I'm just testing out theories right now to see, um, you know, what's going to happen. Again, I'm still thinking the markets are going to be going higher in the day, but currently I could be wrong because the sellers are very, very heavy right now. They are pushing it down pretty drastically. They're going straight for that stop loss at 930 price right now. So it is definitely going to take us out right here. They are heavily manipulating the market, pushed it all the way up, and then just dropping it all the way lower again, back down to the value area low, back down to the previous daily low. So there we go. Taken out of the position. So on a typical account, you would have been taken out right there for a $93 loss. There's some slippage, so 103. So look at that. We gave back 1, 2, 300 something, which basically washed that out. So we're only up about $200 on the day on this paper account. That's exactly why you don't want to be trading your other account after you've taken a $400 profit. Just walk away from the charts. Majority of the world does not make that kind of money in a day. So, be mindful of that, be respectful of that, respect the markets. Go on the paper account and trade on that to test your theories. Outside of that, I mean, it's already 10 a.m. We're forming a new 4-hour candle, and it's just, I mean, it is just dumping here. Probably going to fill in the gap here, like I'd mentioned earlier. Look at the S&P comparative to the Nasdaq. Nasdaq is way back down on the value area low. The S&P is not even close to that. So likely that we are probably going to trade lower, take out these lows down here. These are relatively equal lows. Market's definitely giving that indication. Failed at the value area high. Point of control accumulated. So they accumulated shorts up in here instead of longs, and then just dropped it completely. So I anticipated them accumulating longs. That's what they did right in here, and then they ripped it up like I had mentioned. I was expecting them to accumulate more longs and then continue to push it up to the previous daily high. They accumulated shorts. They were shorting the market, and they pushed it back down to the value area low. Probably going to go down to the previous daily high right here, which is filling in that gap. You could look to take a position short, but we are down at the value area low, so at this point, you've already missed it. You've missed the opportunity to do that. You would have wanted to take that short up here at the failure of the value area high and capitalize on this movement back down, which should have been the same movement here. But you see how much longer this took? This movement, same exact movement, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15 minutes rather than 1, 2 minutes. I'd rather be a part of this than a part of this. This is mental stress, mental capital. This is quick movement, done in and out of the trade, boom, good to go. So like I said, we could come down and take these lows, fill in this gap. That's most likely what's going to happen here. we were to take a short position, we would take the position here, fill in the gap there, stop loss, above swing point high here, and then as we drop through, we would do a sell stop, sell stop, sell stop. And that would accumulate some more positions lower. Again, we are at that value area low. So this is a very, very high risk trade. This is not a good setup, and this would be like chasing the markets, expecting the markets to go lower to fill in the gap. The 10 a.m. candle is this right here, this 4-hour candle, which is 10 a.m. It opened, it went higher, and now it's dropping. So we could potentially see it push down and grab out the lows here, fill in that gap, continue lower, and then even then could still reverse and go all the way up to previous daily high. That is a possibility. Added position there as this gap should be pushing price lower. And if we drop through here, just with the two contracts we have on here, 160, that would almost make back all the losses that we gave back to the market. If it pushes heavy, it's going to fill these orders as it goes, and we would be getting into even larger profits on the day, making back the losses and capitalizing on more gains. So if we were to kind of take a breakdown of this here, we had $182. So we got 135 plus 153 plus 335. $623. Remember, we started out with a $182 loss. That puts us at a $400 gain. Minus 165, 260 minus 72, 200 minus 103. So we're only up $101 on the day on this paper account. So we're still in profits on the day. So if we push down through here, that would put us probably back around that $600 or $400 profit on the day, when we could have just been done for the day in the first 2 minutes and already been at that. So this is exactly why you use a paper account to trade after the fact. If you've already taken $400 profit on the day, do not give that money back. This is typically what's going to happen to you. You are normally going to get chopped around. You're normally going to get beat up. Market makers are going to be moving the market up and down, taking orders, taking you out of positions. Your emotions are going to set in. You're going to get fearful of losing money, and that's going to cause you to overtrade, over leverage, and it's going to cause you to get swept out of the markets. And that's how you lose your accounts. You blow your accounts, you lose the money in your accounts. So this is still a gap that can hold. And again, like I said, value area low. This is a very high risk trade. You don't even really want to be in this trade. If we get taken out here, we're going to be at an $84 loss on the day rather than a gain on the day, which is a bummer because right now we're already at break even, $70 loss. We would, like I said, this is a very high risk trade right here. You definitely typically would not want to be in a trade like this. It's already all the way down here again at the value area low. If you were short, you'd want to be at the value area high going short back down below. This would be considered chasing the markets, thinking it's going to be going lower, when again, right, my expectation is that the daily candle is going to be green, it's going to be higher. So S&P 500 looks like it's holding took off this liquidity. It's holding the midnight and 8:30 price. It's trying to push up higher. It's at that point of control. So we could see a failure here, drop down to fill in the gap, or we could see a push up. Looks like right now we're getting that failure. And then after this, this will be the last trade of the day, showing you guys the markets. Like I said, you already saw the gains on the day, over 400 on the personal account there. And so we're just paper trading here to see what the market's doing, testing some theories out. We could fill that gap in that's lower. So that big black candle there, that is a lot of volatility injection. That is sellers that are really pushing lower. You saw these small green candles moving higher, buyers trying to step in, sellers are liquidating them with these big candles. So when we see that, we would want to see more more black candles that are large candles dropping fast. A lot of volatility, a lot of volume, showing us that sellers are in control. They are pushing the markets lower, and that's what we could get right here. We could get entered in the position. So we're probably going to get entered in that one position right there. It did tap it just slightly, but it did not fill the order. We have another gap right here that was just formed. So we've got the gap that formed at the midnight price and 8:30 price. We've got the gap that formed here at this 9:30 price. And so those, very well could be holding price lower. That's what I look for. I look for the key price times and then areas like this that show me whether or not the markets are either going higher or lower. And if they hold those areas, that is telling me that the markets are going lower. And this initial move could have just been manipulation. Market maker could have been pushing price up to gather all these orders up here to push price lower. And my initial theory of the market going up higher for the previous daily high could be wrong. We could be pushing all the way down lower to grab and fill in this gap, and pushing even lower. We have these lows right here. Remember, like I had mentioned, those are a possibility. So what you could get in the habit of doing too is always marking up both charts, the S&P 500 and the NASDAQ. Just doing the same markups as you do for one, you do for the other. I don't typically do that because I don't necessarily need to see that. I can just see it visually now, watching the markets trading for the last 9 years. I visually can see these areas without having to mark them up on the chart to help me see them. When you're starting out, it's very useful to mark them up so that way you can kind of get used to it, ingrain it into your head to see them on your own. So we are holding the value area high. We're holding the value area low. They are not pushing it lower. They are struggling with that, and it is pushing. The buyers are trying to take back control, push it higher. So if we break this high here, we're going to be moving higher, I would expect. None of these orders, we don't need any of those in. Just like that. So we are definitely pushing higher here. If we wanted to take another trade, we could. The stop would be below the low right here at that value area low. Market on S&P did not take out 930 price. The NASDAQ did. We are really struggling to get lower. We got in the value area low area, and the markets are continuing higher. So we could definitely still see a green candle like I anticipated. Just really depends on the day. With this account, we basically are break even on the day. No gains. That's why I use paper trading to practice theories, right? If you wanted to take this, like I said, you would do this here. Stop loss at the low. Target the high. You would do a buy stop order here. Get that point of control back up there. Buy stop order at the point of control. S&P's back at that point of control. Broke above it, but it's failing again. So we will see. Would like to see it continue to push higher here, right? Move it all the way up to the previous daily high. It came down to this value area low, and they obviously cannot. The sellers cannot get these orders. So these are probably protected lows down here for now. Let this sit for a second. So remember, I'm just showing you guys currently right now on the paper account. I would not be looking at entering any of these trades currently, except for the first one that we did at market open. That would be the only trade on the day. That's why I locked the other account. This is just for educational purposes, just to kind of show you a little bit more of how I think when I'm trading. Like I said, I'm doing this for my aunt and uncle that are getting into trading. And so hopefully this is very helpful to them. So that way they can see my thought process of why I take trades, what I look for, my concepts of areas of liquidity, where the markets are, where I think the markets are going to go, where they typically go, and price times that the markets typically sit at, gather liquidity at, and hit those areas and have reactions and responses off of. So you can see if you look at the S&P on the right, see how it came down to take out this liquidity over here? Let's make that a red line. Okay. And then it had a good response. It's pushing up. Okay. So it is very likely that it is going to continue higher, which means that the NASDAQ, they are correlating assets. So when one moves higher, the other one moves higher. These charts typically look very similar. As you can see, they look very similar, right? Accumulation, lift up, accumulation, drop down, starting to move up. This was accumulation, lift up, accumulated, moved up, dropped down slightly, only retraced about half of this range. If you were to take a Fibonacci tool from the low here to the high, here's the 50% levels right there. That's in a discount, so it went to a discount, and then it's moving higher. So again, remember we in this paper account we were up 600. We gave 400 and something of that back. We are only up about 100 and something dollars. Well, actually 500 of it back, and then now we are back into 21 in profit, so up about $130. As we push to continue, it's going to be entering more positions, and we're going to be moving our stop to capitalize on those profits. And we could see if we push up to previous daily high before 11 a.m., which is typically what you would see is peak of the day hits at 11. If we are going to open, move lower, hit high, and then retrace slightly and close. Sometimes you see a pretty heavy push throughout the whole day. Just kind of depends on liquidity points and where liquidity is in the market. I think the previous daily high is really going to be the peak of the day for the Nasdaq, since the S&P has already taken that previous daily high, as you can see. I will turn this into a dotted line. But the Nasdaq has not, so I would like to see the Nasdaq push all the way up there to grab that as well, and continue to move higher here. So it's almost 10:30. We would like to see some pretty decent movement here. And this is why I say that this is psychologically taxing on you. You know, you want to protect not only your risk capital but also your mental capital. And this is extremely taxing to be sitting in a trade like this. It's moving very slow right now in comparison to this, morning, the first trade we took. And so it's very taxing on your mental health, especially your, mental trading health. Um, and so it just makes trading really difficult because you're going to sit here and think, okay, well, it could drop or it could go, or I'm not really sure. And so it really kind of puts a heavy strain on you. And so, you want to be mindful of that. I move the stop down there just because of this whole area right in here. Essentially, the market could come back into there, grab some orders, and push up. Truthfully, the best stop would be at this low. That's the most protected currently. Sellers are, really trying to hold price lower, liquidating those buyers. Um, but we'll see. So I have a buy limit down below in case we want to poke down there. Then I have a buy stop just above in case we just rip up past it. So I can get my fourth contract in. Um, and then if we go to previous daily high, that would put us really far into profit on the day. Again, we're only at like $130 profit right now if we were to close. Um, if we are wrong, we are going to be down like 400 bucks on the day. So on this paper account, keep in mind, right? I'm just testing theories right now. Um, I like to do this just so I can. It just helps hone your skills, truthfully. Like I said, the other account, I'm up 400. I locked that account for the day, so I cannot trade that at all, which stops you from doing exactly this here, where you are potentially over leveraging. So here we hit that midnight price. This trade would be risking $352 to make 967. If we get up there, that would mean we are up $1,000 on the day. If you make $1,000 in the day and you don't close your charts and walk away, then you are a gambler, um, and you do not know how to manage risk or manage money. And you need to go take some finance classes to figure that out, because not many people make $1,000 in a day. Okay, so if we were to close the position here, we'd be up 200 and something dollars in the day right now. It's actually not a bad trading day. Um, but we're testing the theory out here, so we're gonna go ahead and take a little bit of risk off. We swept out on this low here, so I really don't think we're gonna come all the way back down to this low, but we'll put our risk right about there for now. S&P 500 is back at the previous daily high, struggling. Daily candle is still black candle on the Nasdaq, but it is a green candle on the S&P. So kind of tells me that the Nasdaq is lagging quite a bit in comparison to the S&P. The S&P is moving in the direction that we anticipated off the get-go. So it still gives me a lot of confidence that the Nasdaq is still going to go up here, potentially take out the previous daily high. 30 minutes, less than 30 minutes, 28 minutes until 11 a.m. Usually by 11 a.m. it's kind of hit its peak on the day. It is a holiday week, so keep that in mind also. If you were to play safe, you could take off your profits here instead of go for the previous daily high. That would give you a $600 gain here, risking 200. So it's still over a 2-hour trade. That is very, very good trade. Very good risk management there. And it is, very likely that it could take out those highs and leave the previous daily high for another day. So we're going to leave it like this, just for time's sake purposes, because I would anticipate it getting to this high before 11. If we get back up to this point of control, this thick black line right here, I will then move the stop loss into profit. So that way if it does retrace, we do not give away any profits that we could capitalize on. We are up $100 on the day on this paper trading account. Again, we started with up 600, gave pretty much all that back. So we do not want to do that again. If this would be the final trade of the day, we would want to capitalize and locking in some of our profits. That way, we at least walk away with a decent day. You can see here that we're struggling at the midnight and 10 a.m. price. So we want to see it break through here. And we want to see it push up into that point of control. That gives us a lot of indication and clarity that we are moving higher. This candle right here is the 4-hour candle, and that candle starts at 10 a.m. So a lot of times what you will see is that candle will open, and then if the markets are going to go higher, it's going to go lower like it did, and then it's going to move up higher for the previous candle's 4-hour high, which is this high right here, which is where we have our take profit set. And so since that's what that candle looks like it's doing, and then on the S&P, here's that candle right here. That's what it did do. We could have the indication that the Nasdaq will do the same. It is just lagging behind the S&P 500 right now, quite heavily. The S&P is coming up, looks like it's going to take out the high, and the Nasdaq is just really struggling at this midnight and 10 a.m. price. So again, we're going to go ahead and leave it. We're going to reduce our risk to this low here, because we do not want the market to drop back down to that area. If it does, it's probably going to go lower. We do not want to be in the trade anymore. It has moved far enough away from this zone that I had marked out earlier here. It's moved far enough away from this area. It should not retrace back to it if it's going to be going higher in the day. And remember, once we get up to the point of control, we're going to be moving our stop into profit just slightly, probably underneath this candle's low. Right there, because if it's up here, We do not, it's all the way up there. We do not expect it to then retrace all the way back down here before going higher. And if it does do that, we don't, like I said, your mental tax is just, your mental capital is just as important as your physical capital. You want to protect your mental capital also. So now that we're above this 10 a.m. and midnight price, we want this to hold this price. We really want to see it move up here. Like, we want to see some volatility injection, some movement pushing it up. The S&P is way above the midnight price. It's above the 10 a.m. price, and the Nasdaq is struggling at them. So we want to see some movement. Now we're watching the S&P. If the S&P comes up to grab this high up here, we're going to be moving our stop loss into take profit because the Nasdaq is so far behind it that it may not make it there, or it may struggle to get there. And I want to protect the mental capital and protect the physical capital as well. We're going to take a little bit more risk off right here. At this point, we could actually just put it at break even. So that means if it drops down below here, it's going to take us out of the position at no loss and very little gain. So if we were to take our profits here on this account, we would be back up 300 on the day. And that's actually not that bad. So you could consider that if it's just moving so slow, you could consider just to take the profits. Rather than have to sit here and wait for the markets to gradually get there. Anticipation is, again, previous daily high is still what we're looking for. We would love to see a lot of movement here, up to 40. So we'd be up 340 on the day right now. If you were trading an actual account, up 400 on the day right now, almost. We're at that point of control. We're going to be trailing the stop now. Very, very close, because we do not want to give back any of these profits anymore at this point. So if we get taken out here, we'll be up $260 on the day. We do not want to give back those profits. We want to see some heavy movement here. We are going to trail closely. $430 on the day profit right now. See how the S&P is getting really close to that high. The Nasdaq's probably going to go up there and take that, but you could just take the position off right here, truthfully, to just save your mental capital. That's what we're going to do. This video is already long enough, 2 hours long almost. So hopefully that helps you out if you are a new trader. You can understand how I trade, what I look for, and hopefully my aunt and uncle, hopefully that helps you guys as well. I'm sure we'll be having a phone call discussing it a little bit more in detail. But God bless you guys. Have a Merry Christmas and Happy Holidays.